Good morning, guys. It's Travis from Rebirth Holdings. Before we do anything, please hit the like button, please hit the subscribe button, and leave a comment below. It'd be very much appreciated. But yeah, as Nathan mentioned last week, please do go on the website rebirthholdings.co.uk. Any Forex courses that you'd be interested in, they're all on there. One-to-ones, online, do it at home. We've got everything for you. And bring in another episode of technical analysis. But yeah, as I said, I'm going to start with something different this morning and just touch upon what Nathan was speaking about last week in regards to social media elements. So for me personally, yeah, a lot of people get tied up into the get rich quick scheme, just like Nathan said last week. But what this market's been able to show myself and Nathan is how to treat the markets, literally by treating it like a business. So for those out there that are seeing certain lifestyle from Instagram, from Facebook, whatever, yeah, the ones that are really successful is because they implement their trading in a professional manner. The ones that are popping up every now and then with a picture on the beach, but then they go ghost for like 10 years, come back with another picture. It's probably because they're on a family's holiday or something and not actually reaping the rewards from trading itself, or not implementing trading in the manner that you guys would be perceiving. So as Nathan said, picking it up from like a marketing element, the more people that they can gas up on the social medias, certain companies will pay them a commission. Nothing's purely to do with anything to do with trading. Marketing, nothing wrong with marketing. I've studied marketing, but that's not trading, so don't get sucked into it. But as Nathan said last week, he's been trading just under 2 years, exactly the same time as me. So Nathan actually introduced me to trading November 2017. Was it 2017? Could be 2017. And yeah, ever since, developing. So back onto the element of treating it like a business. So for me personally, my personal journey through trading, it's been a case of I've been able to, some people would say fortunately, some people would say rat race, but don't get me wrong, I still think it's a rat race, but I've been able to work in some corporate environments. But again, from my point of view, love having that experience of working within these corporate environments, because the small little steps that you make on a daily basis gives you that annual return you're looking for, giving you that annual review of success that you're looking for, and treating things like a business. You wouldn't necessarily look to jump from level 1 to level 10 in 10 days. Doesn't work like that. Level 1 to level 10 in 10 months, level 1 to level 10 in 10 years. That's how the corporate environment would work. Now you think about who trades the market the most. The big boys in business, the hedge funds, the banks who hold your money. So the people with the most amount of money and capital in the world, you'd probably say are on the biggest amount of business scale in regards to scalability of how big numbers can be. They're the guys that are dominating these markets. Now, if you want to be getting the money that these guys are making, where do you think these quick flips are going to come from? Or how do you think quick flips are going to be made to be making sustainable long-term big projections? It's just not possible. So you've got to treat this step by step. Forget social media, because those guys ain't going to be around in 2 years time, you know what I'm saying? Or they're going to be around but doing other things when it comes to trading, marketing. So as I said, working from home, it's a case where you got to put yourself within that business zone. If it means you have to kind of perhaps put yourself in that business mindset, perhaps lock yourself away, wear a flipping shirt and tie at your bloody desk or in your bedroom, do it. But you kind of have to put that head on, that helmet on, that hat, whatever, and get yourself tuned in. And then come the weekend, come the evenings, that's when you go and reap the rewards of trading. But yeah, just starting on that. Treat it like a business. Don't treat it like a hobby, because you'll get burnt. And yeah, watch this video back once you've got burnt, because it's going to happen unless you take action now. So yeah, straight into the charts. I'm going to talk you through GBP, USD and USD. So guys, starting with GBP, USD, what you can see in front of you is literally, since I'd say the middle of March 2016, all the way up until current day, July 2019. Now, looking at this weekly time frame, what I wanted to pick up to you guys is where price currently sits at the minute. Now, can you see these points I'm highlighting here? These points for cable are the lowest points the price has hit since the chart, the online chart started in 2003. So the pound hasn't been this low since, well, if you look here, you had that crazy spike in October 2016, and then stabling out on this monthly support at 121.300. So we're back at those zones again. As you can see, we get wicks in these areas, and again this week, wicks within these areas. Now, as I said, cable hasn't been, well, this is the second lowest, obviously this being the lowest price for this pair. We're back at that second lowest price in history. Now, I do like to see the monthly, or would like to see the monthly support hold and perhaps reject. We could say, could we start to see a bullish movement? Not quite, simply due to Brexit coming up in October. But from a weekly time frame, just wanted to point out the key monthly support we're sitting at. As you can see, I don't have any other resistances below this level. I haven't really had to in the past 2 years I've traded, but something to think about now. Because as you can see, the past 4 weeks, 1, 2, 3, 4, have been bearish, including obviously sitting underneath this moving average. So the monthly candle would be a beautiful fat monthly candle, which is going to be bearish. Now, you could see it spike underneath the moving average, but at the minute we're holding, and we're going to step down to lower time frames to see what happens next. All I'm going to do before I step down is perhaps put a little key level in here, just where once we hit that monthly resistance and had a rejection, just zoom in, had that rejection here, we kind of had price spike up to this first level here on that green wick there. And obviously we tested before we brought back into it. And then as you can see, came back down here again. And then in and around that orange line I just created, kind of go back up to these levels and the weekly. So I'm just going to leave that there. Stepping down to the daily though, guys. As you can see, nice clean charts. Let me just get rid of that zone that I implemented there. We are sitting perfectly on my monthly resistances, perfectly. So as I said, can we see a rejection of this monthly resistance? Well, for me personally, I can see a candle formation. Give you a second to think what this candle formation is. Okay, so it's a tweezer bottom, bearish candle, followed by a bullish candle with long wicks, almost identical. Now, that also is contributed with a hammer at the bottom of a downtrend sitting on the monthly support. Hammers always show a nice indication to the upside, which makes sense because we are hitting lows of recent years. Now looking at my RSI indicator, as you see the RSI indicator is underneath this 20-30% line here, the little dotted white line, which shows it's oversold, which we may be able to see a pull up, which is showing you that the sellers may be coming out of the market and buyers starting to get into the market. Now, as you can see, I've got quite a clean chart on this. I'm literally working off pure price and weekly and daily and monthly support levels. At the minute, I haven't got any daily supports. Probably step down to 4 hours to implement some in. But what I will use is see if I can see any retracements before we see a potential continuation to the downside. But I'll do it from the latest swing high. You can either implement it from here. I'm going to start it from here, in all fairness. And then it kind of shows you the levels that we can work in towards. Now, this line here is what I did on the weekly. So that would probably be a first target area I'd be looking towards. But if I just remove that for now, let me just remove this for a second. And then as you can see, looking at Fibonacci retracement zones, it kind of gives you levels to work towards. So you've got your 38 fib as a target there, potentially. You've got the 61 fib as a potential there, and then the 51 fib in the middle. So as you can see, there's not much price action on the daily to kind of test this daily key levels, but these zones here may be a bit more evident on a lower time frame. So yeah, for me personally, I would like to see a slight pull up and a weakened dollar, and perhaps the pound gaining some strength, maybe to the 50 fib as the daily moving average may hold its strength. But as you can see, that's taking it back up to 123 from 121,600. So it's a good 150 pips opportunity. Let me just step down to the 4-hour time frame. And as you can see perfectly, guys, I've actually got it highlighted here. We've actually got on the 4-hour time frame a perfect double bottom. Wasn't in this trade due to non-farm payroll on Friday, so I thought I'd leave it alone. But as you can see, at 2 o'clock after non-farm payroll, we did have a hammer, which could perhaps start that indication to the upside. Now, if you look at the rectangle dynamic zones I put on the 38 and the 61 fib, perfect target zone, target 1 to 38 fib, matching up with this tweezer top at the top here. That would be a first target zone for myself. Thereafter, I'll be happily looking to work my way into this second zone. If the pair has strength, you could see a rejection off here and move back down due to Brexit and due to the heavy downwards momentum. But as I said, gradually with the pound, take it step by step. I haven't been holding long swing trades on pound because perhaps, no offense for myself, I wish I would have got in from the top of the bearish market, but just because I haven't, because I'm a day trader and that's my style, day by day, week by week, every resistance zone you hit, I'd look to take a profit. Okay, now moving on to USD CAD. On the weekly time frame at the minute, you can see I've got some lovely pink weekly trend lines. I like to do my weekly trend lines in pink, differentiates it from my normal white trend lines on the daily and the 4-hour time frame. But I wanted to show you this weekly element. So as you can see this trend line here, in the trend line here, price on the weekly time frame has been working in and between a weekly resistance zones, or weekly trend line resistances. So as you can see, price at the minute over the past 4 or 5 weeks broke out of the upwards trend, hit a monthly support, and it's gone and retested that same trend line. As we know, we like to always come back, break through a trend line, and eventually retest it before perhaps continuing any momentum. And the momentum currently is in a downwards trend here, so we've just kind of created a swing low, we've created a lower swing high, and you perhaps would be looking for continuous swing lows. But if I step down to the daily, just before I do, we've had a lovely weekly closure, which is the spinning top, showing indecisiveness in the market. Now, looking at the daily, as you can see over the past couple of days, we have had some spinning tops, or we can say some dojis here, gravestone doji, almost looking like a shooting star at the same time. But as you can see, I've got my monthly and weekly support lines in, and price has been working in between quite nicely. We've had that lovely downtrend. You like to get a sideways movement after a continued movement in one direction. And then we finally broke above this weekly resistance here. And then we've kind of reached a monthly resistance over the past 2 days. And then we've closed back underneath that pink dynamic trend line. And perhaps people could start to suggest that we could be back towards a retracement of the weekly resistance. Now, for myself personally, I see, as I said, I kind of counteracted what my thoughts are with the cable. I am looking for long on the pound due to US weakness, hopefully. So with the slowdown in momentum, with the long rejections from the wicks on these past 2 days, I am looking to start a bearish movement. How far? Yet to know. But literally, at least hitting my weekly resistance is only 60 pips away. And seeing what happens around my weekly resistance, hopefully I am looking for a break into reaching my monthly resistance again. But with the weekly candle being a doji, not a clear indication of a heavy momentum in one direction just yet. So as I said, taking it step by step, but perfect monthly candle, monthly resistance, rejecting any movements back into the upside. So on this pair, I would be looking for some shorts. I know that with the FOMC minutes last week, or this week I should say, people would have thought that the bear market would have started here. As you can see, 2 dojis followed by a shooting star, perfect. Reacting around the weekly resistance, we're dropping and mounting back into the monthly. With FOMC, it's always important to check your economic calendar. That would have said otherwise. That would have added a lot of volatility into the market. push price up to another resistance. Now the bearish market may continue. Okay, now looking at the economic calendar for next week, or I should say this week now, because it's Sunday, bear with me. I'd say it's a quiet Monday, in all fairness. You have got some manufacturing data coming out on Monday. Anything above 50 is a positive. For me, it just adds volatility. So a nice volatile day, I should say, for the US. Looking at going into Tuesday, you've got a heavy day for the Australian, and you've got some interest rate decisions coming out. And on Wednesday, you've got New Zealand interest rate coming out. So they're pretty big news releases. To be fair, before I leave, I could actually talk you through a New Zealand setup that perhaps we'll be revisiting the middle of the week, actually. So as you can see here, guys, I have been monitoring a break out of this. I did do an article on this where I was expecting targets of this purple zone being reached. Which it has perfectly. Wasn't in the trade myself, but nice meltdown on the New Zealand, which just kind of took us out of that upwards counter trend, and we're continuing the bearish market. As you can see, swing low, creating a lower swing high, and we could perhaps be on the way to making more swing lows. But now, as I said, as we've reached up with this daily resistance line here, this pink candle line here, what I am looking for over Monday and Tuesday perhaps is a possible retracement back up here. As you can see, we've had a doji and then a top heavy bearish candle looking to slow down momentum. Now, if I've got a Fibonacci retracement in here, guys, what I'd perhaps be looking for now is perhaps a movement towards my moving average. So going up to 0.66200. So from the current price at the minute, you're looking at around 96 movements to the upside. That's what I'm looking for. But then in all fairness, you could see some consolidation going into Monday, creating perhaps a nice bullish candle before that happens. But then you've also got the interest rates coming out on Wednesday night, and the interest rate is looking bad for the New Zealand as they are looking to reduce the interest rate. So you could perhaps see that continued meltdown to perhaps the monthly support, which it looked like the pair was on its way to doing anyway. But as I said, my bullish momentum for the start of the week, that's what I would be looking for due to that. I'm looking for some US weakness, but overall, not counteracting how weak the New Zealand's been recently over the past 2 weeks, and can perhaps continue into reaching my D1 eventually in due course. So guys, again, I've gone through an additional one, can't help myself, but literally every week, tune in, like, subscribe. Thank you for watching. Stay pipping. Have a safe trading week.